I'd like to introduce the panelists. Actually, I'm going to let them introduce themselves. Chun, would you like to give a brief overview?
Yeah, Chun Chang. I'm from Shanghai. I didn't convert anything into cash this time. Trying to use my credit card and my WeChat digital account. And I'm from Shanghai. I'm a professor at Shanghai Jiao Tong University.
Thank you. Michael?
Yeah, thanks, Melissa, and thanks for having us this morning. My name's Michael Correa. I'm the General Manager of Asia Pacific for Westpac Banking Group. I'm based here in Singapore, so I've got my Grab wallet, so I don't really need that much cash, even though my children keep asking for it. But Westpac is an Australian banking financial institution. We are predominantly an Australian-based institution, but we have got businesses across the Asia-Pacific region. I'm also responsible not only for our Asia-based businesses, but also our full banking services in Papua New Guinea and Fiji as well, which is an interesting case study for cashless, given what's going on in some of the emerging markets. So really happy to be here, and thanks for the invitation.
Thank you. Henry?
Okay. My name is Henry Ma. I'm the EVP and CIO of WeBank. I'm actually part of the founding team of WeBank. So we started 4 years ago, actually a bit more than 4 years. And we were able to grow from 0 customer base to nowadays having more than 170 million customers on board. So very happy to be here today and share some of our experience at WeBank.
Rahul?
Hi, good morning, everyone. My name is Rahul Shingal. I work for Stripe, run the Asia Pacific business for Stripe. Stripe, is one of the most expansive payment networks globally now. We started in 2011, but fairly widespread now in 40-odd countries. We build payment infrastructure. I've been in Singapore for the last 15 years. I was at PayPal for 10 years before this, and almost all my career I've been in payments in one form or the other. I'm very excited to be on this panel today.
Great, thank you very much. I think to get started, as we think about the world going cashless, one of the most important features is actually the infrastructure. So I'm going to first address this question to Henry to really talk about why has China led the world in digital payments, and what's part of the infrastructure that enabled this to happen so quickly?
Right. I think a lot of people are very amazed about the growth of the market in China going cashless. And in fact, a very important factor is the infrastructure being in place. When I talk about infrastructure, a lot of it has to do with how you do eKYC. Like, without face-to-face interaction, over-the-counter interaction, how do you verify the identity of a particular customer? In China, you talk about eKYC. I mean, it's dated long ago, starting from 2004. I mean, there are already some public services available for companies like banks to be able to verify the identity of a citizen. So this is a very important requirement that needs to be fulfilled. And also the interbank switching network is also very important. I mean, just to give you an idea, WeBank nowadays is handling more than 400 million transactions in a single day. Okay. I'm not sure, like outside of China, any type of the banks have handled this kind of capacity. But more importantly is the underlying interbank switching network, which is in place. Connecting all the banks, third-party payment solution providers, and be able to handle the capacity required. And this has been available since 2013. So it has been a few years since the infrastructure is ready. And in terms of like credit bureau, the PBOC credit bureau, I mean, it's recording close to like 100 million citizen records, and over half of them have at least some credit activities being recorded. So on one hand, the data is very important, but at the same time, the education is already in place. Because when people try to borrow money, if they know that, hey, if they don't repay the loan in time, those data will get recorded in a credit bureau. You have to have that kind of mentality in place before you can actually launch a meaningful, sizable business. So these are the very important fundamentals that need to be in place to support a cashless society.
So Michael, turning to you at Westpac, one of the 4 pillar banks of Australia, and now starting to develop your own infrastructure that you're going to be lending out to some FinTech companies. Can you talk about the infrastructure and how Westpac is thinking about building that digital infrastructure for the future to enable cashless payments not only in one country but across multiple.
Yeah, and I'm going to draw on the experience of Australia because that's where our home markets are. And there's no doubt that banks are being challenged by what's happening in the broader technology space with regard to payments. And there's a clear recognition that banks need to evolve with that technology. The way that Westpac's thinking about this is our hard technologies, our infrastructure around physical servers, physical activity, over the counter has to adopt and change. What we are thinking about at Westpac is really an ecosystem or not dissimilar like China, what the life cycle is around the behaviour of individuals and companies with regard to where their finances are being managed. To do that, we've tried to develop products that not only sit within the company, so we've had to evolve our transactional banking platforms. We've thought about risk management. We've thought about a whole bunch of elements that go with that. But a more critical piece of what we've done is using our corporate venture capital fund. We call it Reinventure. We've invested in 28 different companies. At the moment, predominantly in Australia, we've got a couple here in Asia at the moment. And what we're trying to understand is what the connected elements of those fintechs are with regard to what our banking capability is. So how do we fit that together? Some have worked and some haven't, so we're actually failing in some instances as well. So if I go to payments and I think about, in terms of omni-channels, or I think about merchant acquiring, or some things which banks now are finding to be incredibly difficult or incredibly costly, we're not the natural provider of that. So we're now either joint venturing or actually outsourcing a lot of these arrangements with these fintechs, which we've either taken direct investments in, whether it be through financial investment or through sort of reciprocal arrangements to achieve those goals. So it's non-traditional, but then again, the other side of the equation within our own business, we are evolving as well. So it's doing both.
Chun, I'd like to talk about a comment we had on our pre-call, which was you made a very interesting comment that the U.S. has had 100 years of history of separating banking from digital commerce. And in China, that's not how it's been from the beginning. Maybe you can talk a little bit about the viewpoint from China of looking at this, digital infrastructure that's enabled all of this and what that looks like going forward as well.
Yeah. I guess the infrastructure definitely is one thing. In an advanced country, the infrastructure is probably readier. So I think it has to do with other dimension, the basic financial service, whether it was provided to the most of the population. The advanced countries, the traditional banks and the traditional credit card companies provided most of the financial service. By that I mean the payment service as well as the financing service to larger proportion of the population. But if you talk about China, at least maybe 10 years ago, maybe half of the population was still using cash. So they have bank account, but they don't have any, if they want to purchase something online, most of the people have online connection, but they cannot make a purchase. I think that's where China's digital payment or cashless kind of society arises from that base. So very large population of people didn't have the payment service. So they can also, the banks actually could not issue a credit card to them. So that's where the Tencent and the Alibaba, those companies, the technology companies, they think there is a huge need to service people. And at the time, the regulation of China also was more relaxed towards allowing them to do this. So this is where you see the combination of commerce and the finance to get into this payment system, a payment area, and to service a very large portion of the population that could not make online payments. And that's how China's, how this cashless society started in China and now evolving into many, many other things. But there are also challenges we can talk about later. I mean, but I think the main thing was, I think the traditional financial service companies did not provide good service for a very large portion of the population. That's how China, the digital finance came about. Yeah.
So Rahul, we talked a lot about China and also then a little bit about Australia, but Stripe is a Silicon or San Francisco-based company. I wouldn't say Silicon Valley anymore, but San Francisco. And you're really enabling growth across the internet by allowing different companies to accept payments, digital payments. Maybe you can talk a little bit from your perspective about that growth and the story behind of how Stripe got started to be able to allow these companies to connect.
Absolutely, my pleasure. As you rightly said, we are a Valley-based company based out of San Francisco. Done exceedingly well in the last 5-6 years. In Asia, we service our customers in Japan, in Australia, Southeast Asia, based out of Singapore, and in India, soon expanding into multiple other markets in Southeast Asia. What we've done very differently is we are a payment infrastructure company rather than a payment processing company, and there's a very fundamental difference. What we believe was needed at that time by our founders was that there were basic tools of building an business on the internet was super complicated. Not only just processing cards, but onboarding customers in a compliant way, doing KYC, KYB on them, being able to cater to very different business models and complex business models where the marketplace itself does not necessarily want to be the merchant, but wants the underlying merchant to be the actual merchant of record. And there was a lot of complexity there which was not being serviced properly. So I think they set about building a payment infrastructure company. And the beauty is that you just need to connect once, and then you get access to 40 different markets globally, and be able to get not only processing for cards, but local payment methods. So we've gone ahead and integrated with local payments methods like Alipay, WeChat, so forth, Ideal, payment methods which are relevant for the local market. So our promise is that whether you're an entrepreneur or a large enterprise, you just need to make one connection with us and be able to service a global audience. And so that's kind of the main thing. But what I have been super impressed, as I said, I've been here for about 6 months, and I've been in payments for about 22 years. The technology is so outstanding, and the idea that trying to solve an infrastructure problem. And I think our philosophy is that the problem is not so much payment. The problem is about obscuring complexity from payments and obscuring our merchants and customers from all the complexity that comes with regulatory issues, money laundering issues, onboarding issues, fraud issues, decline issues. I think that's kind of been our focus so far, and very, very excited to be here.
Great. So I want to go back, Henry, to you again, and I want you to talk about what it's like to be a WeBank customer. What can I do that I can walk out of my house with my phone, and tell me what that looks like.
Well, first of all, the experience is purely digital, totally online. So you don't.
How long does it take me to apply to open an account?
Well, if you want to open up like a deposit account with us, it's probably within minutes, just a few clicks away. So essentially what you do is download our app and then fill in the very necessary information, your name, your ID number, your phone number, and then do a facial scan, making sure that you're actually the person that you claim to be. And then the account is ready. And also, you also have to link up with your the so-called regular bank account, right? The Type 1 account in China, because that's actually one of the regulatory requirements as well. So essentially, it's a very streamlined experience. And we also have other products that are being embedded into third-party platforms. So this is very, very important because nowadays, even though we have bank branches everywhere, but people don't really go to branches anymore. Right. Last time I went to a branch in one of those Chinese banks. You see all these old people chatting with the tellers. I mean, essentially that's what happened. So on the other hand, a lot of the transactional activities are actually happening on those internet platforms. To give you an example, the used car platforms that we work with in China, we actually work with multiple of them. When people want to make decision to buy a used car, they actually have the option of paying that in full or draw down a loan from WeBank. So essentially, we want to be exactly the place where the customer is when he or she wants to make a purchase decision. That's the very important part of the new generation banking. So essentially, we really want to be following the kind of the contextual banking paradigm and making sure that we are everywhere even without any physical branch.
And when you're thinking about the product side of it, how do we're talking about contextual finance, right? How do you make those product decisions? Is it studying the consumer behavior, or do you have a list ready to go that says used cars, millennials, next generation is going to buy them? How do you think about the product development side around contextual finance?
First of all, you have to understand the macro requirements. Like, for example, the used car industry in China is booming, right? So there's obviously big opportunities around. And you want to tap into a lot of those like existing platforms who already got the reach out to the customers, and try to partner with them. The traditional way of doing banking is way too centralized. The bank try to do everything themselves. Right? But nowadays, we really need to collaborate and work with partners who have the traffic, who have the user base, who have the data to help you make better decisions.
So let's say I'm buying a used car. I go to my app. I go to my WeBank.
Oh, no, not really WeBank app.
Yep.
It's a partner's app, essentially.
So the partner's app. So you're powering
we offer SDK,
app,
which can be embedded into our partner's apps, app, and then when the user actually pick a particular used car and then want to make a purchase, then our financial services is in there, that they can make a choice to do a loan drawdown.
Okay. Right. So Michael.
So for a lot of the for a lot of the customers, it really feel like they are not using WeBank service, but instead we are the provider behind. We are the pipeline behind.
And how quickly is that decision made? So I'm in the app. I buy a used car. How fast can that transaction actually happen?
We can give them give our customer a decision on whether the loan is approved within 15 minutes.
15.
15.
Yeah.
Yes.
So Michael, that provides a real challenge for the traditional banks. How do banks like Westpac deal with the quickness, the speed, the contextual aspects of developing a product specifically for the next generation consumer?
Yeah.
How does a traditional bank deal with this?
We've got the same problems as Henry's talks about. We've got that user experience that the customers really want to come into, whether it be on an app or an in-presence scenario, where they want to say, I want to, let's say, purchase something or make a payment for something, and they want it done immediately. So there's no difference. I think in the context of bank, we do have this element of regulation, which is probably slightly higher as a benchmark, internally imposed necessarily, not externally imposed, on how we should manage people's money. And this element of, are we the trusted provider of that service? And I don't think necessarily that means that our experience of dealing with customers is any different. We talked about, I think you talked about the branch-in-branch experience in China, where the traditional bank probably, in my experience, hasn't evolved very far. I can give an experience. I was in Shenzhen recently. I was visiting Ping An, and I unexpectedly had to get back to Hong Kong because I needed to attend a meeting that came up into my calendar. And I went to the train station, got dropped off. I was with two other colleagues, and they said, well, you can catch a train back. I had a MasterCard and a Visa card, and that's all I had. I didn't have a WeChat wallet or an Alipay wallet or cash. It took me an hour to find an ATM machine that actually gave me cash that I could get out of the machine. The experience was really bad. So the banks have to face into this, and I do think we are. And I think, in some respects, the ability to partner, and I think this concept, what Henry was talking about, is who sits behind the app, who sits behind the experience that you're dealing with. It could be a new player which has got a virtual presence, but it could also be a bank. It also could be a third party. One of the things that I'm convinced on right now, we haven't seen the end state of what banking looks like. And I'm fascinated with the way that technology is developing. And we talked about infrastructure before, but the ability to provide the infrastructure in a frictionless manner. We've seen it in Australia with programs like the new payments platforms, where the Reserve Bank in Australia said, well, every customer on a P2P basis should be able to get money within 5 minutes. We've got it here in Singapore as well. So as banks evolve in some of these ecosystems, I think we'll see, to a certain degree, a level playing field occur across fintechs and banks and new bank entrants. I think you'll see some banks fall away. So I think the question is, what is that end state going to look like? One thing for certain, I don't see the branch presence disappearing. I think a lot of people have been arguing very much saying, well, you don't need branches anymore. I don't see that disappearing altogether. There's also broader aspects of what the consumer needs is beyond just making a payment. And we talked about the demographics: older people, disabled people, different demographics will still need that. So it's an evolution in my world, and we're seeing, Westpac invests, close to $1.8 billion a year in technology. We're not a bulge bracket US firm, which might be multiples of that number, but for the market we're in, they're substantive numbers. We're starting to experiment with what's happening with buy now, pay later. We're experimenting with working on different forms of payment rails. We work with Stripe. We work with different players in the market. So I'm really fascinated with what's going to happen next, but I don't think we're there. And I think the end state, we might be in a slightly intermediary stage here now, but the end state is still to be, I think, established, and the innovation will get us there.
So I want to, one piece of technology when you talk about new payment rails, let's talk about QR codes. Every time I'm back in the US, you bring up QR codes. People generally laugh and say it's outdated technology. But the fact is that QR codes, drives a lot of drives payments in China. It's driving payments in ASEAN. So Rahul, I'll start with you. I mean, here, Stripe was enabling credit cards, and having now, to be able to accept QR codes to really integrate into the local region. Maybe you can talk about that a little bit.
Yeah, I mean, I remember 5-6 years ago making a presentation to our team in the US, telling them about QR codes and how we should be enabling QR codes, and I got the same reaction, and I think we pretty much get the same reaction. And I keep telling people that, especially in the US, that you've got to come to China to see what's happening. And it's like telling somebody what's the Grand Canyon is and taking somebody there. What China has done in the last 3 years is an inspiration for the rest of Asia, and it basically shows how quickly the inflection can happen, how quickly the user experience can change, and how quickly behavior can change. I think that was the biggest learning. QR codes are very ubiquitous. It's easy. There's no infrastructure needed. We see widespread adoption not only in China, but now in India as well, and large parts of Southeast Asia. Interoperability has been a huge issue. In China, because there are two main players, WeChat and Alipay, and each of them can essentially have their own network. But already you see in markets like India, Thailand, a typical retailer needs to have 8 to 10 QR codes to accept, and it gets very confusing for the user. So I think that there's a lot of work which needs to be done in making it interoperable, so that there's one acceptance mark rather than 10 different acceptance marks. Singapore is actually trying to do that with SGQR, essentially one QR mark. But again, quite confusing because it's one QR and then you need to have like 25 different logos under it. So the secret of the success in China to some extent was, firstly, people were very habituated with using those apps. You were using WeChat 5 times an hour, and it was quite easy to then continue using that app. So I think one thing which people miss is that it's creating habituation is quite difficult, and it was, I think, fairly easy in China in that sense, because people were using those apps anyways, and then just asking them to extend the use case was fairly simple, and then that what helped in the leap. But in some other markets, it's quite difficult now to ask people to do this. I think QR is one technology which is quite cheap to implement. I'm also positively encouraged by, it's the battle for the last inch, really. We used to say last mile, but what's the last inch? QR has been very good. I think RFID, NFC has a pretty bright future in this part of the world. I think it significantly improves the user experience. The larger question which is kind of attached to this is, it's not only about pulling your phone and tapping, rather than your card. That's kind of not really the trick. It's fancy. People will, you'll get usage. It's about, is there any other problem that you're solving? And as you rightly said, in China, the big problem you were solving was that you were able to consolidate a bunch of payment methods at the back. You could get money directly from your bank in a very simple way. Whereas a lot of wallets have essentially focused in just replacing your wallet with a credit card, which is a problem. I think the question there is, what's the additional consumer value that you're solving? Is there enough incentive to scan the QR or tap your phone rather than take your card out? And as a payment infrastructure, we are there to support them, irrespective of what the particular use case is. We are never going to be a consumer brand. We're not a consumer brand. Our job is, we're a payment infrastructure company. We enable other wallets to do it. So we've enabled the GrabPay wallet, for instance. But our branding is not front and center. We are like the brand behind the brand. But I think QR is a fascinating topic. Even in Japan, QR codes were extremely popular in the early 2000s. But they never adopted it for payments for some reason.
Well, it's starting now in Japan.
It's starting now, but not the widespread. usage. But you're seeing widespread usage now in India, for instance. You can start. The thing which worries me a little bit, not so much about QR, but in the wallets in general, is a lot of the volume is precipitated by discounts and cashbacks, etc. And it'll be interesting to see how long this is sustainable, and how do you find a model where people are using it because they find it convenient and they say find value rather than getting the $5 back.
So Henry, maybe you could talk a little bit about, China obviously has been the leader in the QR codes, but talk about maybe not only the consumer side, but actually the merchant side, enabling merchants to take digital payments.
Yeah, in fact, very much agree with Rahul. When we look at the QR technology, it's actually very rudimentary, right? But the important part is how easy is it to build up the habit for people to use it, right? QR code is very easy to use, however rudimentary it is. So even for the merchants, for them, they don't really need to get a POS machine from the bank or merchant acquirer, and then they can just use their handsets and be able to serve their clients, their customers. That's the very important part, right? And also, the fees involved in that is substantially lower than other major switching network outside of China. If you look at MasterCard or Visa, we're probably looking at around 2-3% of fees being involved for the merchant, right? But in China, it's substantially lower. It's almost all of the Alipay or WeChat Pay. We're talking about 0.6% in average. So for those small merchants, especially some of those maybe individuals, owners, they will be able to leverage technology and be able to run their business and still make a reasonable profit out of it, instead of paying a high fees for the money switching provider. So that's a very important part. And even for WeBank, we do a lot of micro business. For example, a micro lending business that we partner with WeChat. The average ticket size that we're looking at is only 8,000 RMB per ticket. And people borrow it for 50 days. And over 70% of those loans only generate less than 100 RMB in interest. When I talk to a lot of the peer bankers in China, this is not the kind of business that they want. It's a money-losing business for them because they have a very, very different cost structure to bear. In our case, it's purely digital. We don't have the branch that we need to pay for. Everything is online, and we don't even pay IBM or Oracle for the technology. We do it ourselves. Right? Over half of our staff is actually in the technical space, engineers or data scientists. We have more than 2,000 people in the bank, so over 1,000 of them are actually building code or analyzing data. This is the kind of structure that you require to run your business differently and be able to drive down the cost substantially. So that's a very important, not just for the individual customer, but also for the merchants as well.
I'll just add to this. It's very often I hear this debate that we're not getting adoption on QR codes like China. And I saw a Singapore example. There was a banking app. I wouldn't name the bank, of course, and there was an option of paying through QR code. And I tried it. So it said, firstly, your app is outdated. Go and update the app. So you update the app. Takes about 1 minute. The merchant's waiting for me. Then they say, OK, we've logged you out. Log in again. So you log in again. Then they say, OK, one-time password. You get one-time password. Wrong password. Enter it again. So it was like a 3-minute exercise. I am a payment geek. I wanted to do it, but I did it. But I think it's not only about what you're putting there on the acceptance, but if the experience itself is horrible, you're not going to get adoption. WeChat succeeded because app is always updated because you're using it for other purposes, and essentially you don't need to log in, and it's just a scan. So when you look at QR code, often people lament that you're not getting adoption is because the back-end experience is so horrible that you're just creating so many barriers for consumers.
No, I think, Rahul, you're right. At the end of the day, it can be cashless, but if it's going to take 5 minutes, you might as well reach in your pocket and pull out a credit, or pull out a card or pull out money.
That's right.
I think you're absolutely right. In the infrastructure, not everyone has succeeded at really optimizing digital payments.
Absolutely.
And whether it's QR code or anything else, it doesn't matter. If it's slow, no one's going to adopt it.
That's right.
But I do think, Henry, your point out on the merchant side, one of the challenges in Southeast Asia particularly is that people are not running out to go buy new expensive digital POS systems, right? Mm-hmm. So QR codes are cheap. Yeah. Right? Yeah. And it can allow them to get into accepting different payments very quickly. And so I think that's also a big part of why it's taken off versus a much more sophisticated technology system that maybe you see in the U.S. or someplace else. Right. Michael, we had a great discussion about QR or not QR. I mean, Australia. No one's brought up Australia yet. So
No.
is Australia holding out for different technology?
No, I don't think we are. Again, this is one of my point around the end state. We've got a very good tap and go system in Australia, and Australia's got a big issuer card world. Like everybody really has either a debit card or a credit card. So that merchant terminal with the tap and go with the integrated network just works well.
Yeah.
And I guess my reflection on listening to the guys talk about this is it is about what adoption works. QR codes, it's very simple and it works. So the emerging markets in particular have been able to run with that. In Australia, we've got a similar experience. People want to be able to sit there and, as Rahul said, make the payment, get their coffee, get whatever they want to have, especially low-value payments, and they want to move. We've seen it with Tap and Go. I think you saw that with the Apple Pay debate we had with the wallets in Australia as well, where the Australian consumer pretty much said, yeah, we love the idea of Apple Pay, but we've got this Tap and Go with our debit card, with our chips. So there wasn't a big, let's call it user demand play to say we need to shift to something else. There is QR codes in Australia, and I've seen it many times. It just hasn't been adopted because there hasn't been a need for it. And I don't know what the end state is going to look like when we actually come down to a cashless state. My coffee shop here in Singapore up at Clinic Court doesn't take cash. It takes either a credit card or it takes a QR code. To me, it's a sense of, well, when merchants turn around eventually and say, actually, I'm not going to take cash anymore, and these are the forms of options you've got. And I think that's when it's going to really shift behaviour and actually really ask the question of the consumer, to your point to the start, who got cash out, to start shifting where we'll end up being. There may be new technology to come out later on as well. There might be a new ecosystem around different forms of payment rails. Stripe's developing one. I know a number of other players are doing the similar sort of thing. And is that going to eventuate? I actually think there's probably more propensity for our credit cards to disappear more than QR codes. I would argue right now.
So, speaking about Apple Pay, I'm standing in the IFC in Hong Kong with two other friends, and we just picked up lunch really quickly. And, all of a sudden, all three of our, American Express cards happen to come up on Apple Pay at the same time. And you're like, OK, this isn't exactly great when you're standing next to someone and the Apple Pay comes up at the same time. Do you want to pay? I mean, the technology needs to definitely get a little bit further. But, I agree. It could be, well, we'll get to that. Rahul and I had this disagreement earlier about credit card rails. But we'll come back to that in a minute. But, Chun, I want to talk about, we haven't talked about one key issue around digital payments, especially, the cash to wallet, which is KYC. The onboarding of customers and understanding who they are and where. So maybe you can talk a little bit about, at least in China, the perspective of the KYC.
Sure. Maybe I just first add on to the previous discussion a little bit and link to this KYC. I think the traditional bank serves there is a wide variety of services provided, and that service serves the relatively high income or median income people better. Okay. And also, we talked about the transaction costs in terms of payment. The credit card is really convenient, so there is no really big urge for the advanced country people to switch to a phone payment. Okay, but the transaction costs, actually, Henry said, is much lower with the WeChat Pay, Alipay, and so forth. Okay, and that really for the poor population, I think, vendors, and they will be more susceptible to accept those kind of payments. So the Chinese model, I think, because most of the people was poor and didn't have credit card, and also this transaction cost is lower, I think that's how got this Chinese model started. So even in the advanced country, I really think, eventually, the American Express, my son works for American Express. But I always tell him, it's not sustainable. I mean, yeah. Well, it is sustainable for their part of the niche of the market. Okay, eventually, I mean, that's not. I mean, this is too high.
But they're going to die off, is what you're telling us?
Well, not die off. They are going to lose a huge part of their custom. Yeah, I think that's happening in China. I mean, so I really think. So come to your question. I think for the there is also a trade-off for the poor people to get the finance, right? So, but there, you talk about the getting financial service on the one hand, and also the privacy issues, and also you need to get the security issues, all these kind of KYC issues. So I think the trade-off for different income levels are different. Okay, so I really think for the Chinese model, especially the Alipay and WeChat model, people are more want to get the service. Okay, and also with all these information available, they use their Tencent, other products, WeChat products, and so forth. You have a lot of information about them, and they don't care about it because they are relatively poor. They want to get the service first. Privacy is not a big deal. So I really think the regulation should be differentiated. That's my point. I mean, for companies for financial institutions that service mostly poor people, should lower the regulation requirement or differentiate the regulation. Okay, in terms of let's say information sharing. If you prevent the Tencent's WeChat company to provide information to WeBank, these are two subsidiaries. According to traditional financial regulation, they need to firewall, privacy, and so forth. And then WeBank has no advantage. Okay, right. I mean,
correct that. We actually have a very strict firewall.
How do they know their customer? I mean, right? I mean, so they won't be able to provide these kind of loans. Yeah. So for those people, you really should, provide. You should put the emphasis to giving them providing financial service first. Okay. So I think this Chinese model tells us we should have maybe more differentiated kind of regulation for different kind of financial institutions. I think that's my view.
And do you see the regulators going in that direction?
I think it's actually unfortunate. In China, it's going in the other direction. 10 years ago, because everything was so poorly serviced, so the regulators actually was very encouraging. Okay, now I think it's moving in the other direction. I think they should be giving more kind of freedom in that. In advanced country, going back to the, I really think there is a vested interest. So the separation of finance and commerce. Let's talk about this. Well, traditionally, maybe this started 100 years ago in the U.S. That was all fine because you don't want to get these J.P. Morgan, those getting involved into too many real economy. They want to reduce their political power. That's political argument. Okay, I'm fine with that. Yeah, but now they may be using this as an excuse to prevent the technology companies to getting into these cheaper financial services. Providing those to the people. I think that is something maybe U.S. regulators will have to think about. Yeah.
Just let's stay on this for 1 second. I think it's a great comment. So where else around the world do you see the same mentality that we've seen in China where using technology to help with financial inclusion, right? And really having the regulators think about developing regulation that makes sense to bring people in the system. So the U.S. we've already ruled out as not happening. Mm-hmm. So what other countries do you see that happening in?
Well, I think really in the relatively low-income countries, emerging economy, this model of payment, digital payment, I think low transaction costs really, I think, should be encouraged. I know the Chinese company, like Ant Finance and so forth, are moving into Africa and also Southeast Asia countries, Indonesia. I think the regulators should now be more open-minded. Used to be all the regulations in the world followed the U.S. model. I mean, basically that's the separation of ownership of commerce and finance and so forth. Even in traditional in Japan, South Korea, they used to have more combination of commerce and finance, and now they separate it because they're following U.S. model. But I think for these emerging markets, I really think they should learn something from China. Yeah, I'm not saying for China. I also criticize the Tencent and Alibaba. Sometimes they are not really. Well, they should be focusing more on the inclusive finance, focusing more on these poor population where they have the advantage. But in some time, they also, because it's easier to make money in the other population. Okay, so sometimes they cross the line, but I really think their advantage is there. So I really think they also need to focus. We need to have a new kind of financial model. Now, these digital finance mostly are for poor people, I think, and they can be regulated differently, but they have to be focused in servicing those. Traditional banks still have your place. I mean, I really think so. But that's a different kind of financial institution, and they should be regulated more rigorously. Yeah.
Well, I do think in ASEAN, though, we do have seen some of the countries, the regulators follow China when it comes to domestic switches, as an example, and lower interchange fees. So, definitely Malaysia, right? The interchange fee is very low compared to, and also, well, in the case of Indonesia, it looks like it's going that direction. But Michael, let's talk from a banking's perspective. I mean, when it comes to KYC and regulation, I mean, onboarding of digital payments is an area that generally people have concern. And maybe you can talk a little bit about that.
Well, I've lost track with the size of fines that the traditional banks have paid over the last 10 years on, let's call it, non-financial risk. It's substantive, and I think that's been the topic of conversation in most bank boardrooms over the last 10 years. So it goes without saying that we have a high degree of sensitivity to whether it be KYC or any onboarding methodology that we do have, or even our basic documentation. My view is that until there is a road crash in one of our sort of new payment rails, regulators will just leave things as they are. And I think the real test, and the test we've seen in whether it be terrorism financing or some sort of sanction-related activities that will trigger an event, that's when regulators will then shift. We saw that in 2008 to 2012. So let's wait for that event to occur. I'm not sure if that will mean the regulators will take a softer stance. I think actually it will go the other way. So that's the first lesson we've learned as the traditional banking sector is around operational risk has been critically important. And I don't think it's going to go away. We are using digital more and more now to get comfortable with documentation. I think concepts like blockchain and using verified channels are really quite critical for us as we go forward. I know we spent a lot of time talking about consumer-based activity, but if I think about what we do from a corporate and institutional world, that's even getting more and more critical. And I think the role that digital plays in business commerce is now actually probably at the most critical point we've been for many, many years. So, if I was actually going to advise a FinTech to come and solve a problem, I think looking at the corporate world is probably where the value proposition really sits. And I do think there's a huge amount of inefficiency sitting in the corporate business environment that hasn't been solved, and is creating those inefficiencies and costs. We've got, as you said, caps on interchange fees pretty much across the Southeast Asian region, including Australia. We've got much more competition that's driving better experiences that are going on as well. I'm not sure if we've actually got there when it comes to regulation. So I'm probably a little bit different in terms of where the view is at the moment, because I know I'm speaking with regulators across the region, and they're telling me, like the traditional banking sector, you've got to get better at this. And we haven't got to that end state yet either. But I do question whether if we get to a position where something really goes wrong, what the reaction of regulators will be. That's kind of my major concern.
Yeah. So, Henry, in China, like, just thinking about the future, what is the trend from your perspective on the tone of the regulation for WeBank or companies like WeBank?
Right. Well, first of all, I would say that the Chinese regulator is also quickly adapting to some of the new market requirements. Like, for example, we are the very first digital bank in China, right? For us to open up new accounts for our customers, we actually need to be able to link up to the so-called Type 1 accounts. And this categorization of accounts actually come in a very timely manner, because without that, I mean, a pure digital bank wouldn't be able to open up a Type 1 account, which requires face-to-face KYC with the customers. So back to my earlier point, I think the Chinese regulator, they are actually quickly adapting to some of those new requirements coming from the market. But at the same time, I think we also see the trend that a lot of those financial services being offered by non-licensed entities are being pulled back into the existing regulatory framework, which I think is also a proper move for the long term, because at the end of the day, I mean, you still regulations to make sure that all these financial activities are compliant, are being compliant to all the existing regulations. So. And I do see that trend happening right now. And in that case, I also see some very good opportunities for the licensed entities to play even a more significant role moving forward. Because, I mean, that represents an opportunities to actually take back some of the services being offered by non-licensed entities in the market. Just give you a good example, I think we are partnering, for example, wallet provider, WeChat wallet provider, to actually offer their wallet users to open up a deposit account at WeBank. On one hand, it's actually good for the customers, right? Because their wallet account is not generating interest. If they couple that with a WeBank account, at least we can pay them interest. And at the same time, the money will actually go back into the current banking system. So at the end of the day, it would be a win-win for everybody. So
that's great. So Rahul, I want to switch directions a little bit for you, which is, when we talk about Asia, it's just not one country, one culture, right, one payment method, right? So how do you think about, at Stripe, dealing with regional, one of the greatest challenges is there's no regional uniformity.
That's right. I think that particular question, one of the most important points is the regulator and the regulations everywhere. And I like to sort of add to what people were saying. Broad agreement is, I sort of mentioned one anecdote. In one of the conferences, I heard somebody ask the Chinese regulator that, how come you don't regulate Alipay the way you regulate banks? They do lending, they take deposits, they do everything. And I heard a very tongue-in-cheek answer. They said that earlier on they were too small to bother with, and now they're too big to regulate. And I think, I think that's kind of what's happening.
Recently, I mean, they moved very big on.
That's right. Right now, because it offers a systemic risk. Yeah. I think the related point is that regulation has to be right-sized. A small merchant opening a web store to sell groceries, for instance, does not have a systemic risk. And our whole thing is where we work with regulator, it has to be right. So regulation is good because it improves confidence, consumer confidence. And I think it's a big part of what we do, is obscuring our customers from all the regulatory complexity. So we are licensed in multiple markets. We take care of all that complexity so that our customers don't need to, so for instance, when we work with somebody like an Amazon in their global expansion, they don't have to worry about local regulations. Or similarly, when we work with large global companies, they don't have to work with global regulation. So apart from the regulatory differences, Southeast Asia is one block, 6 countries. It's often referred to as one block, Southeast Asia, but it is actually 6 regulators, 6 completely different regimes, and 6 times you have to. So that's kind of incumbent upon us, players like us, who can sort of provide some uniformity to our customers so they don't have to worry about it. The other thing is payment methods. A lot of these countries, bank penetration, card penetration is extremely low. So we've got to make sure that we are offering all other payment methods which are relevant apart from credit cards. In Japan, we recently announced that we will be supporting what is known as Kombini, which is convenience store payments, that you make a payment. And I remember 10 years ago when in one of my previous roles, we were pitching Kombini, which is convenience store payments. The CEO had joked that this doesn't sound very convenient. But it's still there. 10 years later, it still has a reasonable part of market share, and it's still going very, very strong. And so sometimes it's easy to dismiss these payment methods. They're extremely popular. So our role in this whole thing is that we will make sure that we will level the playing field there for both the enterprises as well as the entrepreneur. Take away regulatory complexity, make sure that we have all the payment methods that are being offered, whether it's credit card, bank accounts, local wallets, etc. So those are the two main sort of factors which make expansion outside your home soil very, very complicated. One is the regulatory aspect, one is the local payment methods that are prevalent there.
So for the last couple of minutes, I want to spend what's next in cashless, in the digital payment world. So let's start with you, Henry, and then we'll circle back around. What's next?
I think at least in most of the emerging markets, India, Southeast Asia, the big challenge has been digitization of cash. In markets like Philippines, Indonesia, 20–30% of the population have cards and banking access. And at some stage, the telco wallets and the local wallets were trying to solve this problem at scale, but not going anywhere because they were all operating in their own silos. But I think over last 2–3 years, I've seen that really taking shape, and a lot of these wallets becoming mainstream with people like Gojek and Grab. So what I'm very encouraged with is that cash digitization is happening at scale now in Southeast Asia. India, I think the government took a big step, and I think they are the biggest innovator, I feel, in cash digitization with their India 2.0 stack with UPI infrastructure. In almost 3 years, the banking penetration has gone from what used to be like 20–22% to what almost 70–80%. So what I'm very encouraged, and I think which will be the single biggest trend, is digitization of cash, so that cash is now held in a digital form, whether it's in a wallet, on a card, or in a bank account, so that people have more uses of their money.
Henry?
Okay.
What's next?
Two trends. I think, first of all, biometrics is going to be getting more and more attention, and also we'll be seeing more forms of biometric-based payment, like your facial or your fingerprint, to actually complete a payment to complete the identity verification. So I think that's going to be the trend moving forward. But to actually couple with that, we also need to have the kind of security measure to make sure that it's safe and secure for the customers. So that's one major trend that we are seeing, at least like in China. I mean, it's already happening. The other trend is, I think, banks, traditional licensed institutions will become more and more relevant again. But before that, I think a lot of the existing FIs or bank need to be better equipped with technology. So invest more in technology, upgrade your own infrastructure, drive down the technology costs to become more competitive in the market and be more relevant in the new cashless society. I think that's the trend.
Okay, we got 2 minutes. Michael?
I agree first with Henry. I think the role of banks is shifting, and I think that's an emerging trend. Banks are definitely investing and committing to the digital world in a way that we've never done before. So that's definitely occurring. The other piece that I think is really quite fascinating right now is what is really happening with data, and this essence of cross-border data consent, that working with customers and understanding what we can do with data, and this connectivity of data where you say the ability to say, well, I'm happy to have an airline and a bank and maybe a car ride company share and be able to work together, and you say, yep, I'm happy with that and I'm happy to give consent. But I think that's shifting as well. So my two things are the role of the banks and what is really going to happen with data.
Chun?
Yeah, I think in China, I agree with them. The banking will play a bigger role now, but not the traditional bank. In China, because there is a huge, large portion of state-owned banks, and they are very difficult to adapt. I think the newer, smaller banks, digital banks, will grow very fast. In the world, I think in the United States, I hope and I think the payment, the traditional credit card dominated payment system, I think will get a lot of challenge from the technology companies. Yeah.
Good. Well, I think, thank you to all our panelists. Michael, I think you brought up a really good point, which is for another panel is who's going to own that data? But I think that'll have to be saved for another time. So please thank me in thanking our panelists for such a great session.